Good morning, good morning, good morning. Today is Thursday, April the 30th, 2026. And I just wanted to talk because we're now just a quarter into the year because it's 12 months. So right now we're going into the fifth month as of tomorrow. So what I wanted to do was show my returns so far year to date from January to now since I started trading in January this year. And what I like about chat, and I use Chat GPT. So what I did was I put my information from Tasty Trade into Chat GPT, and it did a nice breakdown for me where it says that I'm making a 7.45% return in the 4 months as of yesterday, which is about a 20 to 25% annualized return. Okay. And let me just scroll down. Okay. So instead of doing it by month, which is what I wanted to do, it says my return is positive. So this shows exactly what I have done so far. So I am up over $1,000 for the year so far. So if you take that 12, 11, 01 and you divide that by four, so let's see what I get. That's about $300 a month, about a little over $300 a month that I'm getting in profits. Okay, which is fine. 36912. Yeah, that makes sense. Yeah, I could have just did that in my head. I'm a little slow this morning. What this is saying is that right now I would have a 23% annualized internal rate of return. And the reason why I use the IRR is because, when I have many withdrawals because I'm using it to help pay my bills. See, so it tells you right here, even after pulling money out along the way, you still ended up ahead. That's what confirms the positive returns. Now I want to know how am I doing against 95% of the people out there who's investing in the stock market, which is the S&P 500, because the S&P 500 is the benchmark. And my goal is to beat the S&P 500. It's not to beat any particular investor or anything like that. But what you want to do is do better than what they call risk-free rates, like keeping your money in a checking account, savings account. And look, I already got an over 7% return. So I don't even have to make another trade the remainder of the year, and I would beat whatever I would have had putting it in the bank. Okay. So comparing it to the S&P 500, here's a clean apples to apples comparison between my performance and the S&P 500 over the same time period. See, this is what ChatGPT, and I just extrapolated this into Word. But this whole AI stuff is beneficial because it allows you to see how you're performing. And especially when you're doing investing, you want to know how you're performing. And am I meeting certain goals and benchmarks and stuff like that? So I got 1,200 over 1,200 in profit. Total return is plus 7.45%. Annualized is 23% internal rate of return. The S&P 500 year to date is at best 4.2%. Okay, so I'm beating the S&P 500. As you can see, the metric total return, me is 7.45%. The S&P is anywhere from 3.5 to 4.2%. Annualized, I'm up to, I would be making approximately 23%, while the S&P is on a 10 to 15% pace. So I'm doing about 2 times better than S&P 500. So that means I'm doing 2 times better than 95% of the people out there. That's all this is saying. And it confirms it down here. You outperformed the market. You made roughly double the S&P 500 return over this period. That's very strong for a 3.5 month window. So they're saying that I'm doing very well so far. Um, but here's the nuance, which is important. My internal rate of return is boosted by early withdrawals. So you get cash back quickly and less capital exposed over time. So that means my trades are short. I'm not doing what they call long-term trades. While the S&P 500 assumes fully invested the whole time and no withdrawals. So my strategy plus timing worked well, but this is not a pure same risk comparison. So what they're saying is, had I not been taking withdrawals, but to me that's okay because at the end of the day, you know, I'm able to help pay my bills through these withdrawals. So that's the reason why I'm withdrawing is to pay my bills. Bottom line, you beat the S&P 500 by a solid margin. Your return is clearly positive and strong. Part of the outperformance comes from cash flow timing, not just investment gains. If you want, I could adjust, okay, your return to a fully invested basis, which is a fair comparison. And I should have did that, but I didn't want to do it that way right now. Or show what your portfolio would be worth if you just bought the S&P 500 index instead. I don't need to do that. But what I wanted to know is basically how much was I, like how, what am I doing on a weekly basis, cash flow wise, positive, negative, whatever. Overall, like how is my trades actually performing? Which trades is doing better? Which ones are doing worse? See, ChatGPT can break all this down for you. So these are all my trades so far that I've done, which is quite a bit. Okay, your weekly profit based on your actual data. Okay, so time period is 14 weeks, mid-January to end of April. Your average weekly profit is about $86 a week. Okay, so I want to kind of bump that up, but this average is misleading, which is important. Looking at your trade log, especially in late April, April 17th to the 29th, 29th was yesterday, you did the majority of your trading activity here, particularly in the S&P 500 index, trading S&P 5, S&P SPX options. That's the index. The Nasdaq 100 and DX options. Those are basically iron condors that I was doing in those. The E-mini S&P 500 futures, the /ES, and individual names like Amazon, Meta, platforms, and Microsoft, and I've done other like individual stock trades. Most of your profit likely came from a 1 to 2 week of active. Oops. Most of your profit likely came in 1 to 2 active weeks, not evenly. Okay. Realistic weekly estimate based on activity, active trading weeks of late April, based on the density of credit spreads, debits, and high frequency zero DTE trades. You are likely making 300 to 800 per active week. And low activity weeks, which was early January to April, and it was making $0 to $50 a week. In other words, I wasn't losing money early, but now I'm making more money now as we're moving on. That's all this is basically saying. What your strategy suggests is you're primarily trading short duration spreads, zero DTEs, which is day trading, to one DTE, which is like it's not a day trade, it's the day after, so that's not considered day trading. Index options plus futures, and I'm doing high frequency, so that's what I'm primarily doing, which leads to lumpy returns, not stable income, which is correct. Weeks of high gains plus quiet periods. So it all depends on what news is coming out and stuff like that. Is basically will determine, what trades that I put on, if any. The honest takeaway, yes, you are profitable. Your weekly earning power when active is solid. See, when active. So that means if I'm not active, which means if I'm not putting on any trades, I'm not making anything per se. But your true baseline is closer to equal to 80 to $100 a week. So that's how much I'm making the same. Okay. But my performance is not consistent yet. So that means I need more time. And I plan on doing this for more time. Mm, I plan on continue doing this. I can break this down into exact P&L per day/week win rate on spreads, which strategy is making or losing money, and that will show you your real edge, or is it just good timing? In other words, that will show whether your edge is real or just good timing. So I wanted to know which strategy is making or losing money. You got enough detail here to actually separate. See, this is the beautiful thing about ChatGPT. It breaks all this down for you. You got enough detail here to actually separate what's working from what's just busy trading. I'll break it down by strategy type based on your fills. Your main strategy from the logs, I'm trading index options, index credit spreads, zero DTE, which means day trading to one DTE. Symbol, the S&P 500 index, the NASDAQ 100, and the E-mini futures. Now I'm going to continue doing E-mini until June the 2nd when they reduce the day trading rules. I'm going to continue doing E-mini 500 futures for day trading. Or that's what well, even after whether they decrease the PDT rules or not, which they've already agreed to do that, um, which comes out in June, I still plan on trading the E-mini futures because you could trade after hours, something you can't really do so much right now in the S&P 500 or in the stock market. You can't really do that right now with these other ones, the S&P 500 index or the NASDAQ. But here, I'm the E-mini 500, so I can trade after hours for this. So I'm going to continue doing that. Okay, CR credit equals credit spreads. You collect premium, mostly same day or next day. The debit spreads, which is closing trades. DB, which is entries, often closing or flipping positions. Single stock credit spreads, names like Amazon, Meta Platforms, Microsoft, and Intel. Now, let me do the reason why I did Amazon, Meta Platforms, and Microsoft because those are earnings plays, which means they had earnings that came out yesterday. So I have and you'll see it on the platform when I go to my Tasty Trade account. I did a basically a 2 day trade. So the trading actually expires tomorrow. But I wanted to take advantage of the earnings because it has implied high implied volatility because the premiums are higher. And as a seller of options, you want a higher premium. So that's all that is. You want to because you could collect more money. Then future scalping, intraday trades, heavy activity in the forward slash ES, which is the S&P 500 and I mean futures, and the GC, that's the gold futures. What's actually making money? Index, oh, you see, it tells you here, index credit spreads. Your winner. This is clearly your strongest edge. Why? Repeated credits collected, many quick open and closing cycles, tight spreads, that means 5 to 20 points wide. That's all that's what that means. And I'm trading it a lot, high frequency. Okay, this strategy is consistently profitable and driving most of your gains. So that's what I wanted to see. Yes. The futures trade, which is scalping, ES scalping, small edge but risky. You're doing rapid entry and exits, both for credit plus debit adjustments. See, this is why I'm doing a lot of adjusting and in the futures. And what it's telling you here, you have wins, but also frequent debits giving back some. So I'm giving back some of my wins or some of my credits, should I say. So I'm really still profitable, but I'm not making as much as I should be or could be. Net effect, likely slightly profitable, but noisy, which means I'm over trading. That's all that means. Risk, one bad move can wipe out multiple small wins. So that means that I gotta rein it back a little bit on the futures. Single stock spreads. So that means like trades in Amazon, Meta, Microsoft, Intel. Corp is mixed. I'm having, fewer trades, wider spreads, longer durations, 1 to 8 days. Okay. I'm not doing as much stock trades, less consistent than your index trades, which means, again, it goes back to what I was just saying. I'm not doing many stock trades. And why? Because stocks move more unpredictably than index. Indices, the indices, you can be predictable. I mean, it's much more predictable indices on this move, where stock can be very unpredictable for various news. Like Tim Cook is stepping down as CEO. So that's going to affect Apple, and so that's why I try not to do as many stock trades per se. For that reason, earnings and news risk. Now, this is where I'm messing up at. I'm over adjusting slash churn, your biggest leak. Over adjusting means that when, see, think of it like flying a plane. As soon as a problem arises, I'm immediately adjusting when it's saying that I should be a little bit more patient in my adjusting. I should wait a little bit and let the move play itself out before adjusting. In other words, what they're saying is I'm panicking when things start to go a little bit against me instead of being a little bit more patient. So that's all that means. See, you're giving back your profits via over management. or you're giving back profits via over management. So that means what they're saying is this is likely your number one profit drag, which they're saying is I could be doing even better than what I'm doing if I'm not over managing this, over trading. See, and this is very important because now that I know this, I can adjust accordingly. That's why I'm glad now, for technology and stuff, because it can tell you what you're doing right and what you're doing wrong and how to course correct. See, this is very important. Rough breakdown on down based on your strategy. Index credit spreads is about 70, 85% of my profit. ES scalping, which is future scalping, is about 10 to 20%. See, not as good as the index credit spreads. Single stock is 0 to 10% inconsistent. And my negative impact is over trading slash adjustments, too much adjusting or over trading. So that means I gotta skip. In other words, be a little bit more patient. Don't be so quick to adjust when things move a little bit against me. Let it things play out. The blunt truth. Oh, see, ChatGPT even gives me the blunt truth. Oh, go ahead. What you're good at? Selling short-term premium on indices. Fast execution, capturing small, repeatable edges. Oh, I like the sound of that. What's hurting you? Doing too much. Yeah. See, I gotta slow down on my adjustments. Okay, don't be so quick to make adjustments. Over adjusting positions, trading lower quality setups, stocks versus indices. Because I've had some trades where, like, let's say in BITX, which is a Bitcoin ETF, and some other ones, some other stocks. They're saying those were lower quality trades for me to do. That that I should more or less be sticking towards the indexes because that's where I'm doing much better. It's saying them dealing directly with individual stocks. That's all that's saying. What would improve your returns? Fast. So here's how I can do even better. Focus only on SPX, NDX, and EX credit spreads because that's what I seem to be doing very well in. Reduce trade count by 30 to 50%. So that means not have as many positions or trade count, number of contracts, I guess that's what it's saying. Cut unnecessary adjustments. So in other words, don't be so quick to adjust. Your prof your profit will likely increase while your risk debt drops. Bottom line, your edge. Short duration equals index credit spreads. Your drag equals over trading plus unnecessary adjustments. Yeah. See, weakest area, single stock spreads. That means single stocks, basically. Amazon, in other words, individual stocks. That's all that means. So I might even start doing even less of that, if any, moving forward. You know, if you want, I could calculate your win rate per strategy now, and then see. So I mean, this is the beautiful thing about ChatGPT. I should have did or identified the exact trades where you're leaking money. I know where I'm leaking money, so I didn't really need for ChatGPT to tell me, but I should have went ahead and did it anyway. That's where the real improvement comes from. See, so ChatGPT is so helpful because it tells you how you're doing in your investments. Now let me go to my actual platform. Okay, so we're here. Okay, So this is these are individual stocks. Adobe, Amazon. This is what they're saying that I should be trading fewer of these. Google, Intel, even though I'm doing very well overall with Intel. Oops, got to log in. Intel, I'm doing very well with Intel year to date. Meta, okay, oh, Meta moved against me. See, Microsoft and SPX. This is the S&P 500 index. Okay, so Amazon, I collected $80 on the trade. Right now, I can close out for about almost 90. So what I'm going to do is close this out. I did an iron condor on this one. Right click, close position. I'm going to buy back for 3 cents. Boom. I'm going to wait for it to fill. Okay. Google, I collected $84. Right now, I can buy it back for about 74, almost $75. So I'm going to do that. Don't get greedy. Try to get the full 80. These trades expire tomorrow, by the way. Huh, it rejected it. Why did it reject it? Let's retry this. Because I was in the way. Let's move this. Let's close this out. That's working. Meta, oh, it's down $66. 6603, $603. Right now, I have the $597. Wow, it dropped $66. See, this is what they mean by there's earnings. See, because earnings is unpredictable. You don't know how a stock is going to move. And Meta dropped $66. That's Facebook, by the way, for those who don't know what Meta is. Okay, I'm going to hold on to that trade for now. Worst cases, I'll make adjustments if I need to. But I'm going to let it play out. I'm not going to be so quick to adjust. Microsoft, I collected $78. I can keep $51 of it. So let's do that. I'm not going to stay in this trade for an extra $20. So I did that. And it's SPX. I collected enough on that 130. Let's see. I collected 130, as you can see right here, cost. Let's see what it costs to buy it back. Well, collect about, let me pay 5 cents. Okay, the Microsoft field. So I pretty much could keep everything that I collected with the SPX. So I'm gonna, matter of fact, what I'm gonna do is roll this out for next week. So give it another, and bring in even more money. That's the index that ChatGPT said that I'm doing very well in. This between this here, this /ES and the SPX, they're saying I'm doing very well with. So those are the indexes. One is the index and the other one is the futures. Now, this Intel Corporation, okay, right now it's down $3.18, which is fine. This trade ends in, okay, Google finally filled, closed, so that's good. Okay, so May 8th is next Friday, not this Friday. So, all right, everything is going good, but as you can see, I'm doing well, and the goal is to continue doing well. And I really want to be thankful to, the Dorian Way, um, or Dorian O'Brien, for teaching me the strategies that I'm using now. That's what's allowing me to be profitable in the indexes and stuff like that. And um, truthfully, I wish I would have done this much sooner. I would have saved a lot of time and money if I had just, practiced. I mean, learned this before, if I had just started doing this earlier. But better late than never. Um, and again, I like what ChatGPT is telling me. So, um, if you want to know more, just subscribe, email, subscribe, give me the likes, the thumbs up, email me or message me, and I can explain how, well, how, the strategies that you need to do to achieve a return greater than what the S&P 500 can give you. Anyway, I will talk to you later. Bye bye.